Hello, and good morning, traders. Hope everyone's doing well this morning. This is Ankit here, and we are gathered for this U.S. non-farm payrolls report. And this is an important event, as we know there's a lot of volatility in the markets, and there is a lot of chances for markets to move aggressively one way or the other. So we'll get into it. We'll talk about it and take a look at some charts and take a look at some pairs that we're looking at. And if you have any pairs that you're looking at, or if you're already in a position, let me know. We'll take a look at those charts as we go. But let's start the process and take a look at the markets. So let's just dive right into our trading view, and we'll start to do a bit of a top-down analysis. I hope everyone is able to watch the US dollar video I put out yesterday, because that will kind of give an outlook of what I'm looking at for the US dollar. But in a nutshell, for the dollar, I mean, dollar is sitting at a very important key resistance level, and this is where it's easy to say, well, let's just say if there's a reversal in the dollar today, but the price action is really strong. The hardest trades are always turned out to be the best trades. And as much as it's difficult to buy the dollar here, but the dollar could still march higher because around these levels, the dollar really hasn't budged to move lower or showed us any sign where it wants to reverse. So it seems like the dollar play is still intact. Taking a look at the markets, this is where we're going to start with the top-down analysis and see what the markets are doing, because as you can tell, yesterday was a pretty bearish day in the markets. I mean, talk about those 4% down moves. I mean, whole last year, we did not get any of those movements. And I know we had the rising, inflation was kicking up last year, and things were starting to get heating up, but market just didn't really react to it. So now markets are finally reacting to it, and this is where, I mean, if you look at the weekly chart, it will kind of tell you exactly where the markets are. I mean, you can easily see that the markets were in a strong uptrend. We had a bear rally, and we are back to the previous low here. So this, again, textbook wise, this is a great head and shoulder reverse pattern that it wants to go lower. But the markets are not giving it that easy. There's a lot of movements. We saw the movement that we got right here just a day before yesterday after the Fed, and it was a big move. And this is where, when you get these big movements, sometimes it's difficult to stay on the long-term outlook unless your stops are really wide, because you have to sit through volatility. And this is where volatility is really high. So today is actually a very important day, because today we could see a spark of another sell-off. And if it does, and it's a Friday today, we are right at the support. This is where things can actually get a lot more bearish, or a lot more aggressively bearish, because we are right at the support line. So this is the US the futures chart, but if you take a look at the S&P SPY, I mean, SPY is right at the support, so there is room for this to drop, but right around these levels is where we get these reversals as well. So you have to be kind of watching out for both. Now, taking a look at the volatility, and this is where volatility is pretty high. We got a nice little jump in the past couple of days, and it seems like we're getting back to the levels that we were back in February. So now, what the jobs report expectation is, and can it really spark a move like that? And this is where we have to look at, okay, what are the possible case scenarios? I mean, the expectation is at about 390,000. That's the non-farm payroll expectation change. They're looking for an unemployment rate to drop down to 3.5. So if this comes out hotter or cooler, I think that's where we'll see a bigger move. And to the contrary, it seems like as the news is bad, or the numbers are bad, it's a good news for the markets, because now you're looking at Fed to not be as aggressive and maybe try to make a change. So that's where the expectations kind of run hot and cold. If this comes out much lower than expectation, I think that could be a bit of a sign for dollar to reverse in the short term. But if this comes out stronger, I think the markets will continue moving lower, and I think the dollar will continue moving higher. So that's what the expectation is. Now, looking at the Canadian employment report, which is also due around the same time, if you're not really liking what where the dollar is right now, I think we can see a decent opportunity in the CAD as well. So let's take a look at both baskets. Now, taking a look at the Canadian dollar basket, the Canadian dollar basket is actually very similar to what we are seeing in the US dollar. We have seen outperformance. We've seen a big breakout that took place, and that has been continuing. So I think the CAD is another good currency to trade, as they're actually one of those hawkish central banks out there as well. But now, if we go out in time frame, this is where we'll start to notice that it's actually running into some key resistance level on a basket as well, right around here. So at this point, do we have any sign of reversal? No. But are we seeing a little bit more hesitation here? Yes. So I think this is where you have to really pick your time frame and kind of go with it. We know where things are sitting in long term, but could there be a short-term opportunity? Absolutely. And I think that's where we have to prepare for the best and the worst case scenario. Now, the Canadian dollar going shorter term from an hourly to a 15-minute chart, just to see where it is right now. I mean, the Canadian dollar is sitting right at that resistance point. So it's not really moving higher or lower going into the event, which means that the expectation is pretty in the middle there. So if it comes a hotter mover, I think the CAD will move, and the same thing with the dollar. Dollar is sitting exact same way. It's sitting right at that level. So I think we have to take a look at the initial price action and then likely jump on a follow through. A lot of times, we have an idea where we jump in before the news event comes out. But that's where if you have a strong bias. And I'm pretty sure that around the group here, the bias is not as strong, or the confidence is not as strong that I think this will happen, because, things could change very quickly. 3% up, 3% down. I mean, we could have another up day today, or could we have another big down day today? So we have to be a lot more careful when we pick that, and we have to be very flexible for that. So let's talk about possible pairings that we can find. So in the short term, we are seeing the euro that's actually doing well. We talked about euro yesterday, and where it is right now in this juncture, it's sitting at that resistance level. But taking a look at euro USD in the short term, and this is where, if we look at a 15-minute chart, we can actually find or spot a bit of a reversal, where it's actually made a higher high with a higher low. So if the dollar turns out to be weaker, I don't mind taking a look at this in the short term on this little technical setup, but that needs to be done on a breakout. And I think that's another kind of a bit of a struggle for some traders, is that you form an opinion and you get in on based on that opinion. Have the confirmations in there to support that. So we're seeing that little pattern here, but we don't want to be jumping in until it really breaks the higher support or resistance level there. Outside of the euro, I mean, you can see that on the baskets here, there is not really a whole lot of movement going into this. Aussie's actually, jumping up a little bit, but in the shorter term. But if you take a look at an hourly chart, these things are still kind of trending lower, which means that these are kind of trending shorting opportunities. So the things that looks the best, the dollar yen, it's making a nice little base pattern here. And I actually talked about this yesterday as well, that this pattern actually looks very similar to what we saw back here. So where do I like the dollar yen up on the upside? If it breaks that 131. And I know this is where we have a bit of a room for this to break out. We're sitting at about 130.40, so it needs to have quite a move up in order to get that first breakout. But if the breakout comes, I think there will be a nice decent move off of that. Now, taking a look at other traders, and again, let me go to some questions as well and see what else everybody's looking at. I know another trader is taking a look at dollar CAD. I think this is another pair we discussed yesterday, but look at that, to right at that resistance. So dollar CAD usually had the big move when one is moving one way and the other one is moving the other way, and we can totally see that where if the dollar comes out very bad and the Canadian dollar turns out to be the best. I think that could provide a shorter term reversal. But if you again right now, if you take a look at it, it's sitting at the resistance here. I know it's easy to short or pick a short here, but whenever you're kind of pushed against these support resistance levels, this is where either you see a breakout or you see a reversal. But where it's right now, it's almost like rolling a dice here and say, well, I think I'm going to put a stop at 129, and I think it's going to go move down. That's a fair bet. But in current market conditions, I think it's better to keep the powder dry because you want to see where the movement is and then jump on it. I mean, another thing I've talked about recently is that how the currency market is actually moving along with risk trends, and we can actually see that in stuff like the Aussie dollar. You can see how this thing is moving along the lines with markets moving up 2%, 3%, and then moving down 3%. So this is where you want to stick with what the markets are doing before you pick a direction. So today is important to keep an eye on what the markets are doing. Actually, let's go on a shorter term time frame as we get closer to this news event. And the strategy here is that we'll look at the initial price action, and then we'll take a look at it after that. Again, this is where we'll be on the lookout here. We got the dollar basket on the top here. We got the Canadian dollar over here, and we got the equity markets here. These three things that we're zooming on right now. As soon as we get a bit of indication that one thing is giving us a better idea where the market wants to go, then I think that will be that's something we'll need to pay attention to. So we have about a few seconds left. 8:30 sharp as we get the numbers out, but I think this is going to be one interesting one. So as always, it's better, cash is a position, so don't feel out that you're missing out. Sometimes it's better to avoid the volatility if you're not really doing well in that environment. But there's plenty of opportunities to be had before the event, or as the news event comes out and the markets open up today, and this could be an up day, who knows. So let's pay attention and see what's really moving. And again, if you have any pairs that you're looking at, seems like a lot of traders are kind of the same position here. Let's wait and see approach, and that's a good thing. All right, a few seconds here. All right, so 8:30 here, and let's see how things are moving. So far, actually, we can even go down to a shorter term time frame just to see what the price action is like. So as you can see, nothing really violent movements here. Oh wow! So the numbers are certainly not as. Actually, as the numbers roll out, let's just pay attention. So the number, the non-farm came out about 406,000, just right in the middle there. I think if it was higher, that would have been much stronger number. But this is right at about 400,000. So the initial price action. Oh, we actually have Kiwi dollar for some reason here. Let's actually take a look at the markets. So the S&P 500, the initial price action to the upside. And we can see that the dollar initially is moving lower on the news. And the Canadian dollar, or the bottom here, is actually doing a little bit better. But is that enough to pull the trigger? Well, this is where you have to let the price action kind of process, let the market process the price action before you jump on. What we've seen lately is a lot of reversals. We have seen bearish reversals and we have seen bullish reversals. So we have to not just take it by the initial price action, but take it by a follow through. So the Canadian dollar, as you can see, is looking a little bit more weaker off of that. Initially, it was trying to go higher. Let's actually go into the Forex Factory and take a look at the numbers. All right. So looking at the numbers, Canadian jobs report was much weaker. Unemployment rate in the U.S. actually ticked up a little bit, was 3.6 from 3.5, but the employment was a beat. Out of the Canada, unemployment rate is the same, but the employment change is a bit of a mess. So this is where I think I'm having a bit more clarity on where the Canadian dollar, because this number is certainly much weaker over there. So actually, let's go into some charts here. Dollar CAD. Is dollar CAD is the best play here? Well, you can see that we just got that initial candlestick here, not a whole strong reason to be long or short. Let's also see if the euro is holding. Well, the euro seems to be holding the gain. So this is where the first pick that I'll find is the Eurocad. I mean, we talked earlier about this whole bull pullback. This is the short-term reversals, higher high with a higher low, and if this breaks above that 139.50, I won't mind taking a look at it as long. Initial entry there, as using a stop right below it. So defined risk going at long about 135.95, stop right below it. So that'll be my first initial trade that I'm looking at for an entry right breaking above that. The euro is still holding, and if the CAD start to underperform based on the numbers that came out, I think this makes a decent pairing. So I have a question. What about the target here? So as you can see that there's a nice little resistance level that it needs to clear. Once it clears that, the next level of resistance, there's not a strong resistance level. I mean, I think from 135.87, we can easily get to about 136.50 as a first target right around here. But you can see that on an hourly chart, we have tested this level a couple of times. So if it breaks above it, that there's likely to be a movement, a follow-through movement off of it. So let's go back to our trading view here, and the market seems to be just holding in there. It's not a big buy as of yet, or selling there, but the Canadian dollar actually looks a lot more weaker to me here. The dollar is actually following the suit here as well. So could this be a bit of a reversal day in the dollar? Well, this is where we actually have Eurocad. Again, it seems like I'll get triggered on my entry there. Let's take a look at Euro dollar. Well, Euro dollar is kind of doing the same thing. And for this, it needs to get above that 106 for me to really look at this and it's an entry. Then the next target will be about 106.40. Let's also see what dollar CAD is doing. And as you can see, the dollar CAD's not really doing much. So that's telling you that both the dollar and the CAD is okay. But based on the price action, I would rather go with the CAD over the dollar, because dollar has been more. There's more chance for dollar to have that little reversal breakout. So you can see the initial price action was not a big mover that wants to get you right in. Canadian dollar is the one that, like I said, I'd rather pick the Canadian dollar over right now. And Eurocad, still not hit my entry yet. Like I said, it's right above that level. My buy stop is at about 135.95 or 96. And usually, sometimes it's good to even do a round number and go to about 136 just to avoid any sort of fake breakout. But the price action looks decent here. If you take a look at the euro basket, it's still holding there. And again, the reason why we're picking euro here a little bit is because it's shorter term is doing well. This trade that we're making is not really going to be held over the weekend, so we're just looking for a short-term opportunity, short-term pop. Outside of that, you can see the percentage change. We are seeing a little bit more positive price action in the Kiwi here, and again, this is where Kiwi was been in a nice downtrend, but in the shorter term, it's actually picking up. So it's clear that the Kiwi is doing a little bit better. And in that case, look at the markets are now trying to break out above this. So again, I'm not, like I said that yesterday as well, that I'm not really turning super bearish until SPY actually breaks the support. We could get some wild swings, but until the support is really broken and we have a confirmation, I think we have to be still on the guard here, because markets can flip back and forth very quickly. So far it seems like more in sync. As the market goes up, the dollar goes down. I think that's more in sync over there. All right, let's see if we are getting any closer to our Eurocad. So Eurocad, as you can see, it did pull back a little bit. And again, this is why I always say use a buy stop. We want to get in when there's a confirmation, when it really breaks out. We don't want to get in when there's no confirmation. All right, so we'll leave that out there. I still like it. I think in the shorter term, it's still processing it. But we need to get that confirmed break before we go higher. Let's go back to our initial one here. So seems like there's a bit of a follow through here. So again, I won't be surprised if the dollar actually, because dollar is sitting right at the resistance. So if this is not getting any catalyst for this to move higher, I think the dollar in the shorter term, you can see that it was right at resistance here. We actually just broke that support. So for this to continue, we need to see the dollar basket actually stay below that support, or maybe have the support break, have a bear rally again. That gives you a little bit more of an opportunity to short into. All right, I have another question about dollar yen. Let's take a look at that one, and you can see the dollar yen not so much. I think the yen is still hasn't come out of its funk yet, where it start to actually perform better. I mean, I think every chance the yen gets, it start to actually break lower. So dollar yen, not so much. All right, let's take a look at some other interesting pairs. So it looks like the euro basket giving up a little bit gains initially. And this is where, the way markets are, it could change really fast. The strong could turn weak could turn pretty strong, and you have to kind of wait and see approach. Seems a better idea here. All right, let's go. So I'm actually pretty sure that Eurocad is not. Yeah, so Eurocad is just sitting right there. So no go on that one yet. Let's actually go in other pairings. See if the yen pairings actually look a little bit better. So euro yen, we have Kiwi doing okay, Kiwi yen, but we could potentially see a bit of a movement there, but nothing at this point that's screaming out. We also had Aussie that's kind of turned up a little bit. Again, this is just a direct correlation with what we're seeing in the equity markets. As the risk is looking strong, as the markets are looking better, we actually see Aussie actually perform much better. And as soon as the market actually started to deteriorate, we see the Aussie actually roll over as well. So quite a strong correlation for the market trends over there. Outside of that, again, you can see that the Kiwi, we got the initial pop there, but this is not enough for us to jump on. I mean, what we can do is we can take a look at a high and a low of that candle, and whichever side it breaks first, we'll probably likely go with it. So another question here, do you think it's a good entry right now, or is it better to wait for the market open? If you really look at the market price action lately, that's a very good question. This market has been moving a lot, as you can see, around the market opens. We have seen, let's go yesterday's price action. Overnight, we had a big rally a day before. We kind of based a little bit, pull back a little bit. You can see that nothing was as aggressive. As soon as the market opened up, right over here, right around this point, that's when the acceleration took place. So there's definitely more movement coming at the market open. And I'm sure if we have to go to currency pairs like Aussie Dollar, you can see that it was kind of doing the exact same thing, 930 right there, and you got the catalyst, and that's where it start to move. So yeah, whichever way your direction you're looking, that's not a bad idea right now, especially to wait for the market open to give you an idea which way it wants to go. Because yeah, like if the market opens up and it totally reverses it could totally happen. Then that's where it's better to stay out. And use 500 here. You can see that's where the bigger movements are coming. So this is maybe a bit of a precursor of what the sentiment is. Like yesterday, the sentiment was a bit weak, and then we actually got a lot more weaker throughout the day. Today, sentiment is more sideways, which means that we're trying to find which way market wants to go, want higher or lower. All right, I have other questions here about the Aussie Kiwi. Okay, let's take a look at Aussie Kiwi. So I always like to kind of do these pairings just to keep track of where the relative strength and weakness is. And as you can see that on a daily chart, this thing has been on quite a tear in the past few days and weeks and months. This thing has hit a very key level of resistance at 111, and even at 105, 110.53. This is highest we have been in the Aussie Kiwi, going back to 2018 and 2017. So at this point, yeah, like I think in the shorter term, the Aussie Kiwi likely to play that little bit of a back and forth, and you can see overnight. It actually started to give back a little bit. So this is a bit in a bit of a pullback form right now. But I think at this point, both the Aussie and Kiwi look similar to me, based on this price action. And of course, there will be times where Aussie is advancing more than the Kiwi, and Kiwi is advancing more than the Aussie. But we probably could start to see a neutral price action between those two. So not a whole lot of divergence. So let's talk about divergences. Look at another price action where the divergence is taking place. And remember, these divergences are great to jump on, because you can totally forget the volatility and just focus on price action. Euro Swiss franc. I mean, the entire month of February, you can see the negative, the whole divergence was taking place, and we went from 106, almost hitting parity at about dollar. And as you can see right now, we are seeing the opposite. So I think if you're looking for something that is less volatile, look at Euro Swiss franc. It actually broke that resistance right here. And at this point, I think the next level of resistance will be about that 105 to 106. Those are all already feasible levels. And the only issue with these kind of currency pairs is that you just don't know how long it will take. It carries less of that explosive moves that you get in some of the currency pairs. But if you're just following that, I mean, if you take a look at this week, we went from 102 to almost 104. So without much hesitation, that was a nice 2% move there. So I think at this point, I'm seeing that divergence taking place, which is telling me the Swiss franc seems to be acting much weaker compared to the euro. So I think Swiss franc is a much better pick for me to the further downside. And we can actually see that in pairs like dollar Swiss franc. I mean, this thing has been marching same way. And even Swiss franc yen, you can see that it's slowly deteriorating. So I think Swiss franc seems to be a decent play on the short side. And let's just say if you're looking for a reversal, we can also pay attention to stuff like look at CAD Swiss franc moving nicely, Aussie Swiss franc. Despite that volatility you can see in the Aussie dollar, look at Aussie Swiss franc. Aussie's still doing better than Swiss franc. I think Swiss franc is an easy kind of a target for me on a further downside. And if you take a look at the Swiss franc basket, again, a lot of currencies have kind of broken out, had a big move. This thing has been holding up, but much better here. Usually the Swiss franc act as a safe haven currency. Clearly not the case. Back in February, you can see that this thing was holding steady, not really moving anywhere, but just in a tight range. But now you're getting with a higher high and a higher, with a lower high and a lower low. So that's a much easier correlation to pay attention to. All right, let's go back into the pairs they're looking at. Eurocad, see if we trigger on an entry. Well, it seems like it's kind of fallen back within the range. So, no, we are not in this position at this point. Let's see if we actually can find anything else. And again, I hope you realize when you're trying to scour through the pairs and trying to find a position, a lot of times you'll find yourself that you're trying to push a position or push a trade when it's not there. And if you find yourself doing that, again, back off. That's always a good point to stay focused on. All right, let's go back into this. So look at that, like how quickly markets reversed with the initial price action, and the dollar is reversing back. So this is where I think the risk lies with the dollar. Dollar is very strong, and every chance it gets, it bounces back really fast. So correlation-wise, I think you have to pay attention to the equity markets. So if the equity markets are moving lower, I think the money probably stay in the dollar. And if we talk about currency of safety, dollar is acting as a currency of safety, and there have been times when yen has been acting as a currency of safety, actually. But right now, I think the dollar is really the ultimate place where we are seeing that. Outside of that, I think euro. Look at that, euro basket is back to positive here as well. I think overall, euro seems to be a better play for me. And if you try to pair something, I think if, let's say, Aussie turns out to be weak, I think we could see continued euro strength against some of the other pairs. And again, that's just a shorter term trade that we're looking at for today. We'll pretty much revise our outlook going to next week. But yeah, euro basket, you can see that it did pull back a little bit, and then it reversing a little bit. So in this case, if the market has another tough day today, I think the euro Aussie is the one that we can pay attention to. That would be exact same pattern on this little breakout. But I think at this point, the Eurocad seems to be looking much better when the technical setup goes. Let's take a look at I have another question about Aussie CAD and Kiwi CAD. And as you can see, like those are the pairs that I had on my list for the past few weeks, and they have been working out really well. You can see that the price action has been a lot more on the downside. At this point, I mean, right now, Aussie and CAD, I think they're kind of dead center on a 15-minute chart. All right, I have another question. Actually, a couple of questions more here. Let's take a look at pound dollar. And Mark, just point out, like, okay, exactly you're looking at pound dollar long, pound dollar short. Let's actually talk about pound. So pound had a big move yesterday, and I actually will be. And I actually had a great question that why the central bank raised rates and the prices fall down. But it's not always the case for every currency. So I'll be actually doing a video on this, just like how I did the US dollar video yesterday. I'll be doing another video on the interest rates. We'll cover like different aspects of raising rates, but not only taking them literally by looking at the rates, but see how they're impacting. So just make sure. So there's another change, as you notice. Another change we've done is that we're sending out through YouTube. I'll be sending out links as well, but make sure you go subscribe there as well. So then that way, you don't have to rely on the email link to come out, and you'll know exactly when the video gets popped up. So away from that, the pound dollar again. Do I like it on the further downside? Well, at this point, let's take a look at it on a shorter term basis. Well, the price action looks pretty weak. There's no doubt about it. We had a big move yesterday and a bit of a sideways move. So the question really is that, how much is you think the pound is likely to move lower? And right now, pound is very staying flat. So this is where you have to answer the question. When we take a look at pound dollar, it actually looks good. But is pound really a play today? I think after a big move yesterday, the pound likely to consolidate. I think that's what we're seeing here. Look at the tail here. We did pull back and we're getting a bit tail. I don't think the pound is really going to be the big mover today, honestly. This is where the target is really the dollar. So let's take a look at dollar against everything else instead of, taking a pound dollar. And right now, again, looking at the currency, I think Aussie definitely has a lot more chance to break lower if the market moves lower today. So I think on that note, I would say I do like the Aussie dollar much better on the short side. Where would I pick a break? If it breaks that 70.64 down to 70.34, I think if it breaks this level, let's go higher time frame. I think this is where we could see a further downside. Aussie still hasn't really given up much gains. What we saw from the RBA. This thing is still holding there. I think the Aussie standard risk for further down move. I talked about Kiwi yesterday, and I think in the shorter term, I like Aussie short better than the Kiwi. Again, you can see in this Aussie and the Kiwi performance here, and this is where always pay attention to Aussie Kiwi, Euro Swiss franc, dollar yen, because that will tell you exactly which currency to pick. Um, right now, Aussie is showing more underperformance. Look at the Aussie dollar, Aussie Kiwi. We are reversing off from that. As you can see, the RSI moved lower. Let's actually pick the the parabolic SAR. The parabolic SAR is now negative. This is negative. This is turning lower. I think the Aussie has a little bit more downside risk. So if that's the case, then we want to be Aussie dollar short. But always just remember one thing when you're trading the Aussie right now. Very dependent on what the market does. And let's say market opens up today and the market started to rally. Aussie likely to follow that suit because again, correlations are working. This is very different than what we saw back in February and March when we had the Ukraine crisis. Markets were selling off, and we actually saw Aussie was up, Kiwi was up. Like those currencies were actually doing really well. So right now, that's not the case. They're moving along with the markets. So Aussie dollar probably would be my better pick. All right, I have a question from Alex about Euro Yen Long. So let's take a look at Euro Yen Long. So here's the thing with the Euro Yen. I do like it, but the question really is that what would be the best case scenario for this? If the market do rally today, I think the Euro Yen do make sense. If the market doesn't rally today and actually start to go weaken a little bit, I think the yen could stay positive and not really break down as much. So I think in that case, I will be a bit more wary of that. So I think Euro Yen, as we take a look at the setup, let's go on a 15-minute chart. We got the resistance right here. So resistance is at about 138.10. I would need to see that break above that level, but the technical setup is not really as clear to me here. So let's go back to Eurocad. So Eurocad is actually doing the exact same thing, which means that if I take a look at CAD Yen, it's pretty steady. So yeah, I think Eurocad or the Euro Yen, very similar. We're just not really getting that breakout that we want to see to actually jump on a position. Consuela says dollar Swiss franc on averagely chart. Well, right off the bat, I should do love that pairing. Like we just went through, Swiss franc looks really weak. And despite the market strength or market weakness, the Swiss franc's not really taking part in it. So I do like Swiss franc more on the short side. And Alex, going back to your question, I think Euro Swiss franc, look at that. That's much a better pairing to pick than the Euro Yen. So let's go back to dollar Swiss franc. Yeah, I actually really like dollar Swiss franc. If you look at the chart, I know when you look at the daily chart, it kind of look extended. But again, you're looking at a shorter term position, which means that you're trying to go with what's moving today. You're not trying to figure out what's likely to move for the next next few days. We're just looking for something today. So I do like, I definitely like Aussie, the dollar Swiss franc. As you can see, it's getting back to the resistance of 198.86. I think a break above that, it can easily spark that. But yeah, beautiful price action there. Talk about relative strength and weakness there. This thing is moving very nicely. So, Consuelo, I know you're looking at a 1 hour chart. I think the 1 hour chart to a 15-minute chart, they look very similar. So I always like to consult with one time frame above, especially when you're trying to pick an entry and trying to pick the right area. So if your entry is based on an hourly chart, then take a look at 4 hour chart and look at 4 hour chart. Beautiful little basing pattern and a further breakout. If you're looking at a 15-minute chart, then you consult with an hourly chart. And actually, they all are lining up, which is a great thing. Not a lot of times they actually do line up. So when they do line up, you want to go with it. All right, so we like that. We like the dollar Swiss franc right now. I've also said that I like Euro Swiss franc and the Aussie Kiwi. I know, odd pairs to pick, but again, that's where we're getting that movement. That's where we're getting that relative strength and weakness. Outside of that, there's still a bit of a play that could come after the market open up. I mean, right now you can see that market just don't want to stay positive. Every chance it gets, it just turns lower. So Canadian dollar, it's actually reversing as well. So maybe we'll have to back off on the Canadian dollar there. Again, it's not the economic number that comes out, it's about the price action. This thing is already reversed the move that it came from that. So we don't want to see that. So every time a news event comes, you always need to take a look at retracements. The smaller the retracement is, the better chance it is for it to break lower again. But at this point, I think it's getting back to its level here. And again, going back to the point that the Canadian dollar is actually very strong overall, that's where little small short-term dips can be easily bought out. And actually, now take a look at Aussie CAD. So Aussie CAD would also look decent as well on a break if the CAD turns out to be much better. But right now, if you take a look at dollar CAD, I think look at dollar CAD. I know this is where traders tend to shy to jump in because, if this is a range bound price action, I don't like to go for breakouts. During the range, I like to stay within those ranges and not really go for breakout. But the fact that we are seeing breakouts a lot lately, then in a directional markets, you want to play the breakouts. In a non-directional markets, you want to avoid the breakouts. So that's a bit of a tip I will have there. But realize that even though if it breaks above this level, the 128.90, let's just say, it still can go. It's the big level of resistance is 130. So I think there's still that wiggle room for this to kind of jump off that. But yeah, that's the one that looks decent here. Let's go back to dollar Swiss franc, and same thing. If you're looking for an entry, make sure you pick the breakout point. Like, we don't want to get in if it just stays consolidating. So Aussie dollar is the one that actually is back to the support point here. So I think something that's getting closer to that point, the Aussie dollar. Let's see what the Kiwi is doing. And again, we already kind of determined that. And this is the thing. We take a look at Aussie dollar, Kiwi dollar. They probably look exactly the same. But Aussie Kiwi is telling us that today it's the opposite. Look at that. We're seeing another similar move, but Aussie is much weaker. All right, let's go back to the Euro Swiss franc. So look at that. We got the little push here, but staying steady. So I think market needs a bit more convincing here. So I think this is where probably wait for the market open. I think that will be the best thing to do because that's when things can really change in a very short term. But those are the pairs that we're looking at. So just pay attention to it. Like I said, don't push a trade if it's not there. Today is just a Friday. We're looking for shorter term trades. We're not trying to get in something that we could hold for the next few days. So keep understand the risk, understand the volatility, and volatile markets are very different than other markets. You have to be very flexible or look at things on a day-to-day basis. So don't get married to any outlook. All right, well, wrap things up here today. Again, if you have any questions, just reach out to me directly. Send me an email. Otherwise, we'll keep everyone posted. Till then, take care. Have a great weekend ahead. Cheers.